Hi everyone, hope you're all doing well out there. I hope you're hanging in there. This week has been a proper sluggish week of earnings, hasn't it? Like everything just seems to be coming out and dropping off earnings, especially the growth stocks. Growth stocks are just not being loved at all this week. And I've seen a few stocks get hit. It's not as good as the last couple of weeks. Last couple of weeks were a few companies that reported earnings and they were doing quite well. But this week, everything that seemed to report it, even like Hims, I think Hims was this week, wasn't it? It seems so long ago. Even that like had a pop up and then ended up giving pretty much all of its gains back. And this week it's just been a bashing of stock prices, and some of them have been like actually okay earnings, and they've dropped a lot. And Shopify, Shopify ones that I own, and this got absolutely bad yesterday. Down 18%, and today we're just going to talk about some stocks that are absolutely getting battered, and obviously the title of the video, what this video is called as well. So Shopify came out with an EPS beat by 0.03, revenue 23% year over year growth, beat by 10 million. What else you want? Those are pretty impressive numbers, and they beat them. A few people might have pointed out to the guidance being a little bit weaker, but it wasn't massively weaker. But I saw the classic kind of thing come out and say, oh, it's the valuation. I mean, I was looking at Shopify and go, 7-8 times forward earnings, it is a rich valuation. But let's be realistic here. You're not going to get Shopify at like 20 times forward earnings. Shopify is like one of the best businesses in the world. It's got one of the biggest moats with probably one of the biggest growth drivers for many years. You're not going to get this at 20 times earnings, guys. So it's always traded at premium, and it will always trade at a premium. And I looked at the earnings and thought the earnings are good. Maybe say, oh, you know what, it's been on a good run. I mean, actually, to be fair, it hasn't been on a good run because it's actually negative year to date. But I mean, it's had a bit of a recovery. But I just saw the drop yesterday and I went, come on, like this isn't an 18% drop day for Shopify. Like these numbers are decent. Like fair, I would understand like a little bit of profit taking off the table. Maybe the guidance maybe went, oh, let's take a little bit of profit table. Stock goes down maybe 3, 4, 5%. 18%, guys, give me a break. It definitely didn't deserve to be down 18%, and look at the potential growth that's coming for many years. It was absolutely crazy. But two stocks I own that are not performing that well, and I actually saw this the other day, and someone in the comment section put, you only talk about your winners, you never talk about your losers, and I was like, that's like the biggest offence you could have said to me. That was the most offended I've ever been by a comment. I was like, I get fed up with talking about the losers. I get fed up talking about them. I talk about them so much, I feel like. I think there was even stocks that were massive failures from like 2021, 2022. And I think I was still making videos on them in 2023, even though I hadn't bought them for like 18 months. I still talked about them. If there was any potential that they improve, or if it was on the portfolio reviews. I was like, sometimes I feel like me being a bit transparent and talking about my losers and not just my winners sometimes, I feel like it gets me into trouble sometimes talking about them, because I feel like if I just hyped up my winners, I feel like I probably have a lot more views and a bigger YouTube channel, but I'd rather be transparent, and I thought that was the case. I was absolutely shocked. But Corsair is a stock that I do own. I guess I could actually say, I did own actually, to be fair, but Corsair is one that I own, and they had a big drop yesterday, down 8%. Pre-market action was really weird. The stock actually dropped, and then it gained and was break even, then it dropped again. I was like, that's a lot of action going on in the after hours. But yeah, Corsair, the numbers were very poor. There was a big EPS miss. Revenue at decline of 4.7%. This was a major miss. So they did 337 million in revenue, and they missed by 25 million. That's a major amount. It's a big miss. I mean, it's all. I always looked at it and going, it's all right saying it's going to trade at 15 times forward earnings. But for me, I was just looking and going, but are they going to do that? Because the business is struggling, the EPS is getting even bigger of a miss, revenue's declining. And I was looking at the management team. The management team said, oh, we still have the full financial year outlook. And I was like, no way. No way, when you've missed by this much, you're recovering this in the back end of the year. Just downgraded guidance. And this has actually made me laugh with Corsair quite a bit, because I feel like the management team have done this a lot in the years I've had the stock. Is they go, they start off with a horrible start of the year, and they go, oh, second half will recover, we'll still hit our guidance. And then it gets to Q3, and then they downgrade the guidance. And it's like, well, wasn't this obvious? And I feel like management all the time, like, try and cover the cracks at the start of the year, and then by the end of the year, they end up downgrading the guidance. And then it gets to the next year, and they go, oh, but this year is going to be a different year, and then we'll get into Q1 and we have a big miss again. It seems to just be quite repetitive from Corsair at the moment. But I mean, I think there is a decent company under there, My only issue is that I look at it and I just don't see any improvement in the next 2 or 3 years from Corsair. Gaming looks to be struggling. We look at consumer spend, and all the time since the pandemic and the excess saving, people had so much money to go splash on everything, and we've just seen the excess money, especially from the younger generation, just go lower and lower and lower and lower. And it's lowest it's ever been now. All these price increases, all this inflation, all these interest rates. The consumer, especially the younger consumer, just doesn't have the cash to go out and throw it on, Corsair parts. And I just feel like where gaming is and the economy is at the moment, I just can't see this recovering for the next 1 or 2 years. Maybe by year 3, 4, 5 it might recover, and it might look a bad time to probably sell out this position here. But for me personally, I look at that one and going, I'm down 50% on the position. It's like, why not just cut it now? It's a bit of a sting, it's a bit of a loss, but 50% isn't awful. When you look at that, you could quite easily make up that probably in another stock. And is there a better stock out there right now in the stock market? There's probably a better stock out there than Corsair out there at the moment when you look at the financials. Is it worth putting that into another stock and that goes up, try to get a double up on a new stock, and that, more than makes up for the returns in Corsair? Is that potentially where you look to go with it? And that's my thinking there, because, Corsair is just, it's in a big mess at the moment, and it looks like with the consumer environment and the gaming environment out there, it looks like it's probably going to be like that for probably another 2 years. And then by the time you get to year 3, 4, 5, would you have been better taking that out and you would have made it up somewhere else? That's what I'm kind of thinking around Corsair at the moment. But let's go on to the title of the video. 7 minutes in, apologise. A few people say I'm blabbering on and not getting to the point of the video, which is Boohoo. So Boohoo, I've sold it all. I've given up. I talked about this in maybe 12 months ago, 18 months ago. I said, if there's no improvement from Boohoo, I'm just going to cut my position and move on from it. And that's what I did. It didn't mean taking a big loss. I think the loss I took was around about 78% loss, which is not attractive. What I will say, and what will not get mentioned at all in the video, in the comment section, while there's a few people that have suddenly come out of the caves and started typing in the comment section, is that you've got to remember I've had this stock for quite a while now, and what people won't mention is my first time when I bought in April 2020, and the stock went up over 100%, and I sold for 100%, and then I bought back in again, and there was a times on the dips where it went back down to the £2 range, went back up to 40 times earnings, and I was selling for 50, 60, 70% profit. There was multiple times that happened. Not that it makes up for the losses, no doubt, but there was profit taken in there, and it just won't get mentioned at all. And also, I guess that's a point of view where, when you see a stock sometimes go up so much and goes to them extended valuations, even if you believe Boohoo could go to many high share prices for many years, it's always probably worth taking some profit off the table just in case the worst case scenario does happen. And with this one, I can kind of go, yeah, I did cover myself a little bit. Not enough to make up for the losses, but if I was to work out what my neutral position would be on that, it wouldn't be a 78% loss on Boohoo. It would be more towards probably a 30-40% loss with the profit I've taken, which then isn't that bad, but still, it's definitely not attractive. And it was a larger position in my portfolio, which definitely does sting. But yeah, I mean, just look at that. Basically from 2021. Just look at the fall in the share price. You're talking about 83% in a year, and that's really hard as an investor. It's really hard because you can be in a stock for so long and you see it slowly build up, and something just so quickly goes wrong in an investment. And it seems to happen more and more where something just goes so wrong overnight, and then you're down like that, and you're like. And then you give it time, you give it a lot of time trying to see if they're going to turn it around, and it just doesn't seem like they're going to turn it around at all. I've got a lot to say. I'll try to keep it really brief, but the results came out. The results were absolutely shocking. The losses absolutely ballooned to 31 million. Revenue decline. Revenue was down at the high end of the guidance, down 17%. That's a massive decline in the guidance. And then I looked at the outlook, and the outlook was just so bare. Like they basically gave out the bare minimum they had to. They could not come out at the start of the year and say, look, we're not going to grow. So they did. They said, we do expect to grow. Something here, we are targeting GMV growth. No mention of how much that will be, but they had to say they're growing at least. They couldn't do another negative year. So I was like, that don't fill me with confidence. Obviously the debt's a lot higher as well. The balance sheet's not attractive, and if they're going to carry on losing money, that's not attractive as well for the balance sheet point of view. They didn't even mention about profitability. They said that they are going to generate positive free cash flow in financial year 2024. How much that will be, I don't know. But it looks like they're going to probably be loss making again in 2025, probably again in 2026. I just went same again. I looked at this and went, this. I can't see this turning around for at least 2 years now. So would I rather just take my money that I have left in it and try and make it up somewhere else? I just thought that was the case. It was the better opportunity. But Boohoo's been frustrating because I still feel like they've got an active customer base. Like I still think they could do well. I just think they're being terribly managed. John Little, the CEO, I've called this. I said this on the video. I know sometimes when I talk about Boohoo, I've seen that management team from Boohoo do watch the videos, and I said before, like, if I'm going to stay a shareholder here, you've got to kick out the CEO. He's got to go in the next 12 months, and he hasn't. So that was, I said it, and I'm going to follow through with it. I don't change. I don't mince my words. I follow through with what I'm saying. And I said, if they don't boot out John Little in the next 12 months, I'm leaving as a shareholder. And that's what I did. I don't know how he still got a job. I have no idea how he still got a job. He came in March 2019. So the first 12 months is a free year. It's a free year as you settle in, right? 2020, helped by COVID. 2021, helped by COVID, basically. So the first time we've actually seen John Little come as a CEO was 2022, 23, 24. What's happened? Stock's been absolutely killed. He's done nothing to benefit the stock. Nothing. He got 2019 doesn't count. 2020 and 2021, he got lucky because of the pandemic years. When it actually came down to like battling away, look at how successful Primark's been. Look at how successful Marks and Spencer's been. Temu, Shein, this has fallen behind. And it's management team. It's not been able to ride the storm. Look at Superdry, bad management team, haven't been able to ride the storm. It comes down to the management team, guys. And unfortunately, they've let me down big time. They have not managed the costs. They expanded way too quickly. They saw the rise of Shein, Temu, and they just keep doing the same stuff. They literally in the report there was no difference of a change in the business model. They keep saying the same. They keep doing the same stuff and expect different results, which is just insanity. Temu, Shein came along. So, we're going to do everything for a lot cheaper. Boohoo, all their fast fashion customers went, you know what, we can go get it for half price. Don't mind waiting for the extra delivery. I'm going to get it half price at Shein and Temu. And at that point, Boohoo just sat there. They obviously can't compete with the cheap labour rates, questionable labour rates that a lot of them Chinese companies pay. So they're still trying to go, we're trying to pay everyone a fair wage in the UK. And it's cost them. Like, all this from the media and everyone like that, it's cost them trying to go, look, honestly, we're paying fair wages. I mean, it's great, but if it gets your business killed, it's not great. They didn't compete to the cheap labour that was able to be done by the Temu and Shein, that they were massively undercut. They didn't pivot to go, okay, we need to go get cheaper labour ourselves, we're going to move our labour out of the UK. They didn't do that. They didn't go, right, our products are basically higher end products now towards Primark levels. And John Little's background is in Primark. And at what point did they not go, right, we cannot compete with the online space. We can't. If we keep doing this, Shein and Temu are going to crush us. And they just sat there and took it, which is insane. Absolutely insane management team. And at no point did they go, you know what, we can't compete with this online space. Let's keep an online space, okay? Let's keep it. Let's reduce our lines a little bit, which they have reduced the lines a little bit, but not for this reason that I'm about to say. And then, let's actually open up some physical stores. And a few people say, don't do physical stores. Have you seen Primark's numbers? Have you seen Primark's numbers from a couple of weeks ago? Have you seen the Primark numbers from 2023? Have you seen the share price of Primark? Physical stores still work if you do it right. And when you've got someone that has been successful at Primark, when you've got a brand like Boohoo, and you combine that with an online store and some physical stores, you only open up, let's say 10 stores around the UK and say, you know what, these are doing really well here. Why not try it? Because at the moment, the business model's fucked. There's no other way to put it. If they keep doing this, the revenue growth isn't good enough, the profit growth isn't good enough. And I saw on a forum the other day that people saying, there's green shoots out there. How was the green shoots? The fact that it's barely growing, that it's going to be still loss-making, and even if it does get up to a little bit of profitability, the profitability is going to be still nowhere near to recover the business. You got to change the business model, guys. Your business model has been attacked, and you still keep doing the same thing. You've got to adapt, guys. You've got to adapt and change that business model. And I still don't know why they didn't go to like a physical store or branch out. Why are you not? there's other things that they could have done. Like, why didn't they expand to other things? Like, obviously they had the Revolution Beauty. Why didn't they tie up Revolution Beauty when it was, you know, dirt cheap prices? That was something that was probably worth looking at. You know, and then maybe using that as a big, you know, reduce your weight into the, you know, the actual fast fashion business, and then build up, you know, the makeup business through Revolution Beauty. You could have picked a great brand up for such cheap prices then. And, you know, what was that, 20 million it was at? You could have thrown a 40 million bid on that and acquired that, and they slept on that. I mean, they bought a stake and then they just didn't follow through with it. And by the way, in the report, that was probably the most impressive thing, was the profit they made on the Revolution Beauty acquirement that they made on the shares. It was insane. Like, I was at the point where me would be better managing this company than John Little. Like, literally, boohoo. If you're watching this video, I'll come in and manage your business for you, because I'll do a better job than what's going on right now. I just don't understand how they have slept and stood so still for so many years. And once again, in the report, there's nothing there to say that it's going to change. All they're basically saying is, you know, we're just going to try and manage costs a little bit better. But it doesn't matter when you've got Shein and Temu that are eating you up. You know, people want the cheaper clothes and they don't mind waiting. And you just keep doing the same thing. It's crazy. So, yeah, same again. I think there's a good business model under there. I think there's a good brand, boohoo. Pretty Little Thing. There's good business models, good brands over. There's a big active customer base, and they've just slept on it, and they continue to sleep on it. And I just got to the point where I was like, as long as they keep doing this, there's no point in me holding. And that's why I sold out, and I had to sell it, because I just can't see the stock doing anything in the next few years as they continue to do this. And they're happy with what's going on. And management team are happy with what's going on as well. And when I see management teams like Corsair's management team, and they're happy on these results, like they're not even questioning the results, and I see like the likes of Boohoo and their management team and attacking like this isn't good enough and addressing it, I just can't be in those businesses, guys. I just can't. So yeah, a little bit gutted, but it happens sometimes. It doesn't work out, and you got to move on and try find hopefully next opportunity that can hopefully rebound from this one anyway. So hope you enjoyed the video anyway, guys. See you in a bit.